Hey guys, what's up? It's Javon. So I was kind of nervous about doing this for a while, but I'm going to be starting a financial intelligence channel. And I'm doing this for a couple of reasons, but the main reason is I kind of just want to learn, you know, if I know what I really know, and I want to be able to go over what I know. And they say if you don't truly know something unless you can teach it. So that's what I'm trying to do, I guess. And I mean, it's a lot of knowledge that I have learned over the past couple of years. And no, I didn't graduate from college or anything like that, but I still have a lot of information inside of my head that I'm sure I can give to some of you guys that may not be at the stage that I'm at yet. I've learned from people above me, and that's just how it goes. So we'll start it off. So there are 4 principles to financial intelligence: accounting, investing, marketing, and law. So if you want to be able to make money and make even more money after you've already acquired some, you have to know what to do with it, and you have to be able to keep track of it and keep others from taking it from you, and you have to know how to put yourself out there and actually sell something, because it's a business. This is all business. So first one is accounting. You have to be able to understand what it is you're buying, what it is you're selling. Are you getting assets, or do you have liabilities? You should be able to read an income statement and balance sheet, because they're basic things, but if you haven't even heard of them, you should probably go check them out. There's plenty of things on YouTube. YouTube is a gold mine. So understand the numbers and comprehending the story of the business. Example, balance sheets and account statements, as well as cash flow. So basically, you work at a job, you bring income in, and you get your paycheck, whatever, every 2 weeks, Friday, monthly, get your check. Then you have bills. Most middle class people pay their bills and all these other expenses first. But what you can do, is instead of buying liabilities like, what is it? Your rent and mortgages and stuff like that, you could be buying assets, which are things that increase your income. So that's accounting. And that's just basically the story of what those numbers are doing, and where the money's going. It's like a storybook. So number 2, investing. Investing, a simple definition for investing is you're committing either your time or your money to an endeavor with the expectation of making a profit, i.e. real estate investing, stocks, bonds, certificate of deposits, also known as CDs, and other business ventures. So say, simplest explanation, I'm sure we've all heard of it, lemonade stand. You want to buy that shiny new bike that you have. It's $110. So you don't have a job, obviously. So what do? You open up a lemonade stand, and you have to buy supplies first. So what do? You have to get some sugar, water, and lemonade. So after you get those, they all have a price. So those would go into accounting. You have to take note of that. Those are your expenses. So I don't know what sugar costs, like $3. Get some water, a couple gallons of water, $5. And then you'd get your lemonades. Those would be like what, $3, $2? I don't know. But basically you'll have all that. And then you add up all that. Those are your expenses. So now what you want to do is you got to start selling. You got to have customers, which would play into this part, marketing. Creating relationships and satisfying the customers, clients, by offering them a value. So it's a hot sunny day now. We have lemonade. We have value now to customers. So now we know, since we invested in that lemonade and it's a hot day, we're going to be able to sell really well, because that's a value right now. And so basically you start selling your lemonade, and you know everything's going good. At the end of the day, you make your $110 to buy your bike. So this is what the middle class person does. They say, cool, I'm done. I'm gonna buy my bike. No, that's wrong. It's what everybody's been taught, and it's horrible. The majority of people I know have been taught that. No, it's bad. What you should do is set away maybe $10, I don't know, $20, I don't know. Put that away, but don't stop the lemonade business, because that's what your cash flow is coming from. It's your income. So now, maybe it's, man, $110, we'll say that 2 days. So $50 a day. So now you do that for 14 days, you got $700. But if you buy that bicycle that first day, well, those 2 days or whatever, you know, you got nothing. You got a brand new spanking bicycle. It looks pretty nice and stuff like that. But, you know, could have $700 in 14 days. You know, just being consistent and, you know, growing your business. So that's the first episode of Financial Intelligence. Oh, I'm crazy. I'm sorry, guys. Probably have to edit this out. Forgot one. Law. Law is basically like understanding basic tax principles and being law-abiding. Like, you can't basically expect to make money in America if you're breaking laws. Like, you can't do anything with that money. Like, yeah, you can be a crook and all that stuff, but no, we don't want to do that. Everything I'm teaching you is gonna be how to make money in the real world and legally. So basically, an example is there's a 1031. It's called a tax deferred exchange. So say I buy a house for $50,000. I could get a down payment on that house, put $5,000 down, and then I can say, hey, I know of a house that's maybe 75,000, 100,000. Let's go with the 100,000 just to keep it even simpler. So I put that $5,000 for that house. I get a house. Now what I can do is I can sell that house. Remember, I've only put $5,000 down, but that house is worth $50,000. So if I could sell that house for $75,000, I'll make a profit, and I'll still, you know, I'll make that capital gains profit, that $25,000. But then, so I don't want to have to pay the capital gains from that house, what I can do is I can go look for a $100,000 house, a $200,000 house, and I can basically use the money, the tax money that I got from that previous sale from the $50,000 house, and I can then do the same thing with this house, and I won't have to pay any of the taxes on it. So taxes are one of the biggest things, if not the biggest way of investing your money and making more money, because, you know, it's free money. You already have it. You just have to keep the government's hands off of it. And a lot of middle class and low class people don't know how to do that. And that's basically what I'll probably be showing you the majority of this channel. I'll read the definition. An investor, well, a 1031 tax deferred exchange allows an investor to sell property to then reinvest the proceeds in a new property and defer all capital gains from the previous house. So you see, like I said, buy one house, you get the capital gains tax, but you don't want to pay that. So before you pay that tax, you go buy another property, and you'll just keep doing that, and eventually you can have a $500,000, $1 million, $2 million, $10 million property, and you're not paying those taxes on them because you keep finding these houses. And you also have cash flow coming in because you have notes that people owe you money for these houses and stuff like that. So we'll get in more depth with that. But, you know, this is just what I've learned so far and what I wanted to show you today. So have a good day. Comment, share, subscribe. Javon's out.